What's up, everybody? Michael and Coco here. You're watching the Daily Stock Market Brief. This is the show that we do Monday through Friday, 5 days a week. We use technical analysis and intermarket analysis to get a good idea as to where the market might be headed next. Today, interesting day. We had our 13th consecutive green candle on the SPY. Hooray! That's probably some type of record. We had inflation numbers come out today, higher, and guess who did not like that? The dollar did not like that. Gold seemed to like it. Silver seemed to like it. Crypto seemed to like it, right? Bitcoin, we're gonna go over all of those charts. But you know who didn't seem to like those numbers? Senator Rick Scott. Take a look here.
This morning, the Consumer Price Index came out. Annualized, it's just for the last 12 months, it's 2.6%. But if you actually take January, February, and March, it's much higher than that. If you look at last Friday, the Producer Price Index came out. If you annualize the first quarter of this year, it's over 10%. So what we're starting to see is a significant risk of inflation in this country. The Democrats and the Federal Reserve need to wake up and start looking at this and how they're going to deal with this, because this impacts the poorest families. I grew up in a family, I watched my mom struggle to put food on the table. So when you see inflation, when you see food prices up 3.6% in 1 year, when you see gas prices up 23% in 1 year, the poorest families get hurt the most with that. And so I think it's important that the Federal Reserve and the Biden administration start thinking about how they're going to stop this increase in inflation.
It's time to wake up, he says. Let's get into today's episode. What's up? Welcome back. We're over here looking at a S&P 500 seasonality chart, and I'm bringing this back because, well, it's been matching the seasonality script. You can see the start of April, we've had 13 straight green days in a row now on the S&P 500, looking at the SPY. And I want to take a look here. This is the average year. You can typically see April goes from bottom left corner to top right corner. So it's pretty good, right? Yeah. Well, first I want to call out the post-election here because that's what we're in. We're in a post-election. You get to see a big rip to the upside, pretty aggressive. But now we're coming kind of into the mid to end of the month. You can see a little bit of a pullback here. So this, if seasonality is really matching this script, just take note that mid-April to towards the end of April, right? This is probably around the 20th range right there. And we're kind of approaching that fast, right? Today's the 13th. It has a little bit of a pullback, but it's followed through another high. All right, and we'll talk about that here in the daily charts. But I just wanted to kind of call that out. So if seasonality does play a role, you know what? We might actually see somewhat of a little bit of a pullback here in the very near future. And that makes sense once we get into these charts. Let's look at the market dashboard here. Not much movement overall, but one thing that I want to call out here is utilities taking the lead today. Now, utilities, when they do typically well, you typically can kind of look at this as a risk-off type move. They're lower beta stocks. You typically go into those for dividends, and when you see utilities outperform the S&P 500, typically could mean that there's some, something taking place kind of be behind the scenes here where people are trying to move from a risk-on environment to a risk-off. Now, technology was also up there, though, too, as well, and we'll get into that here shortly. Look at the yields. Yields pulled back. Technology right there up at the top, and we know how technology performed in recent months when the yields were on the rise. Now, I want to call out Bitcoin right out of the gate. Bitcoin is breaking out of this ascending triangle. That's a very strong breakout, right? The last time we had a breakout, it was much stronger looking right here at 20,000, and we didn't even get a back test, but we roared 100% in a very short period of time. So are we going to see a continuation here? Hey, you got to give bulls the favor of the doubt. We're, trending up significantly, right? The 50 period sloping up, the 200 sloping up. The bulls are just stair-stepping higher, and now we're just breaking out to all-time highs. When I look at the fib extension, which is not on this chart, it looks like a measured move right around 68,000. And if you get past those levels, it says that we can reach up to around 80,000 for a 1.68 extension level. So we'll keep an eye out for all of that moving forward. Looking at the daily chart in the S&P 500, this does technically fit the script, right, for the April seasonality chart. You can see April pretty much vertical up. Now we're running into an area of resistance, and we're getting a little bit overbought right here. As you can see, the seasonality chart, we kind of run up, we pull back, we run up higher, we pull back, and then we run up higher again. So we are kind of matching that script. We just haven't seen that pullback. And I don't think that we're setting up for we could see some sort of a massive reconnect to the 20-period moving average, but still overall, even that kind of a move would be setting itself up for a really good buy the dip opportunity around 4,000. But I don't see that happening necessarily this week unless if something some interesting type of news comes out to really rip it to the downside. But I am seeing some internal weakness. We've been going over that the last couple of days. Let's move forward. One of the on this SPY on the 30-minute time frame, I want to call out a negative divergence and this tightly coiled rising wedge. If we do break down from that, it's an easy target to go fill 407, and 407 could act as an area of support. That was a previous gap. Once gaps are filled, they can act as a support. So or resistance, depending on where the gap is, if it's above the price or below the price. Now, when I look at the internals, right, we got a little bit overbought here on the RSI, and now we're starting to see it actually curl down. So actually, the internals here on the BP chart went down as the S&P 500 rose. And now I've seen this previous times where this was an early indication of, a day that goes down. But nothing's guaranteed in this market, but I do want to call out still we are overbought here. We're kind of curling ourselves back down, but the S&P 500 reached to an all-time high. Now, also the NIAD, I feel pretty happy about this because not only did I call this out in the next chart that I'm going to show you, but somebody who I really admire, Nordman trader, Sven Henrik, he posted the same chart, and I was pretty pumped about that on his Twitter feed. So if you don't follow him there because he is typically way ahead of the game, especially way ahead when it comes to me posting my daily stock market briefs. So this is just a big negative divergence that's been building since April 9th. You can see the internals have been weakening. Even on the day right here on the orange line, you can see from this high down here, or from the open to where we closed. And then right here on the S&P 500, we closed here and we had a higher close. So just the internals are just saying we're getting weaker and weaker, but the price action is pushing higher and higher. This has to be confirmed to the downside for anything, but just notice the weakness isn't getting stronger here. It is continuing to diverge. And then when you look at the XVG, you can see, this rally right here on the S&P 500 looks very similar to here in September, and also to me personally in June too. Now, on my previous video, I think the thumbnail said X factor, and that was just because I marked little X's, but this one, the XVG, the equal weight, right, it matched the move in the SPX. It went up and then went down. Here, it didn't match it. It just was up and then leveled out, although we did have some sort of a blow off top, and then we reversed. And then here, this did check the boxes. So November, we had this big move up, and then we also had that big move up with the XVG. So everything looked fine there. And this move, being that it looks like a similar type of ramp up, I just wanted to call out that it's not being followed through with the XVG here. It is diverging, which to me says it could be playing the script here as of September and or June, which could set up a corrective move to around 4,000. Then you look at the null. This is also just internal. Come on, the new highs, new lows, as we're reaching all-time highs here, it's doing so on significantly less strength. So individual stocks are carrying the weight here. Also, breadth from the NIMO, the Mnise-McClellan Oscillator, 10.23. So down on the day as we're continuing to press higher. So notice the internals are even weakening more here as we push the markets higher. This could mean that, okay, we're probably going to see some sort of pause here in the very, very near future. I wouldn't be surprised to see some sort of a down day tomorrow. But then again, the market's 13 straight green days in a row. I wouldn't be surprised to see a 14th at this point. So it's a very exciting time in the markets. And in the conclusion section, I hope I remember, but I want to just talk about, about being wrong and being right and risk versus reward, and kind of just, reiterate all of that stuff. Now, here's the Qs. Qs broke out to all-time highs. Woo, awesome. Now this turns that into an area of support. Now it gapped above, right, and then pressed higher on the day, moving into a little bit of an overbought area. Volume has been just kind of subsiding here. It's almost non-existent. It's pretty crazy how much is dying off right here. And then also, not to mention, Q's 13 straight green candles as well in a row. So it's like bulletproof, right? It's absolutely crazy. And the typical saying is stocks take the stairs up, but they take the elevator down. Well, this to me looks like an elevator going up. So I would be very interesting to see what a down day is going to look like. Holy moly. Now we talked about obviously inflation numbers, and you saw that little video at the beginning. Silver here did like it. Silver was looking pretty weak. We had this little tiny gap down today, but then a full bullish engulfing candle here, still breaking above the right falling wedge here and above the 200-day moving average. Now, I'm really liking this right now. Let's see if we can get some follow through. The RSI is still below 50 here. It would be nice to take out the 50-day moving average and then get back above here. Options, the 2023 expiries, or how do you say that word? The expiration date is available, right? So I'm seeing some really good opportunities around getting like GDX or SLV, or yeah, I would just say I really like those two. So for example, the SLV, you can get, dated out to like April 2023, I think it was. I don't have it in front of me. But, I would be picking up I think SLV is right around 23 or 24. I'd be probably looking at those contracts for long dated, long call options. They seem very appealing to me. So I'll be probably talking about that more here in the very near future. When I look at gold still managed to hold above 1700. That is good. So far, things are going good. It has a little Brontosaurus pattern here. You can see the little leggy here and the little leggy there and the long neck, and now it's kind of flagging out. So hopefully we get that continued strength. Maybe we can get back above that 50-day moving average. That would be real good for gold here, but notice how it's just kind of tracking sideways, but it's building a base. This is a good sign as of now, but we need to hold 1700. It's very important to hold those levels there. Oil up slightly on the day. Everyone knows that I'm in an energy trade right now. I don't have that chart in front of me, but the 50-day moving average is holding strong. 50-day EMA is holding strong still at this particular point in time. I'm down about a percent or so on that specific trade, and I do plan on getting out if we close below the 50 period moving average. I hate it when my money's stagnant, and for the last 2, 3, 4 days or whatever it has been since I've been in the position, it's done absolutely nothing for me. So it's just a game of patience right now, or I'll probably reduce the position size or get out and then wait for a confirmed breakout to see if I can catch stronger move. And the reason why I'm talking about that is because oil is important here, right? We're still kind of slowly building up here, which is a good sign. Many people think we've cracked down and hit around 54 to 50. And that's a big possibility as we're trading sideways. I'm liking to see this strength come in. I would like to recapture the 50 period and get back above 62. That would just set up for just an amazing opportunity within energy stocks. And even the XLE, I think, is really going to start bouncing from that 50-day moving average if that is the case. But we'll see. The dollar down on the day, cracked below 92. Last time we cracked below 92, Bitcoin roared. And then we also had, what else did we have that was going really well? Well, we had the S&P 500 do really well. Once we cracked below it here, you can see the S&P 500 just took off. Now we're starting to crack lower. Look at the S&P 500 as it continues to ramp higher and higher. One thing I want to call out here, 50-day moving average is approaching the dollar. That can act as an area of support, so we might potentially bounce from that area as the S&P 500 is moving into an area of resistance, right? So this could be a buy on dip here, potentially for the dollar, and this could be a point in time where we consolidate on the S&P 500 or pull back slightly. So that is just something that's in the back of my mind. Then I look at yields. Yields are kind of topping themselves out right here. Who knows if this is consolidation to break out to higher highs? But as it stands right now, we're just slowing down right now, and that is what's really helping out, in my opinion. It's helping out gold, it's helping out silver, and it's helping out technology sector right now too. So let's see if that kind of move continues here as we press forward. So now just kind of wrap up, as a conclusion, kind of where my thoughts are going into tomorrow and the rest of the week. Well, first off, I'm on kind of high alert right now where the price action currently is. I'm bullish. I'm bullishly cautious. So most of my setups, they're all long setups because I don't really want to short the market right here. There are individual short setups that I've been looking at and I'm considering, but nothing that I've announced to anybody yet because right now, we're just in full bull mode. So what I want to call out and just reiterate is the S&P 500. It's been on just a monster streak. It's matching up with seasonality. There's a point in time in April where we do get somewhat of a pullback, so just be mindful of that as we're moving into area resistance and we're seeing these internals weaken a little bit. I still see some very, very good setups. One of the setups that I called out on Twitter was MIC. Even INVE took off 14% today, so absolutely awesome. If you were able to catch that, congratulations. But MIC has been building some strong volume coming in, so my eye is on that ticker. I don't have the chart up in front of me, but just so you know, I am looking at some pending breakout. I also entered into an Ethereum trade just right at the breakout zone, so I'm up about 6% on that position. And then I'm very interested in Bitcoin and Ethereum right now as we're just recently breaking out. So I'm trying to position myself to capture some of those gains. And then once again, energy, I still think that that's going to be just a very strong sector. I don't know if I timed it correctly. It still has the option to potentially head lower here just by looking at some charts and some breakdown areas. So just be quick to exit. So from a risk versus reward standpoint, what I wanted to reiterate here is it's okay that if you're wrong, multiple times, or if you're right all the time. I just want you to know that, first off, if you're right often, never get too confident about it, because confident can lead to complacency. And if you're right a lot of wrong times, just make sure that you're making your losses, quick and harmless, okay? Focus on position sizing here, because you will have a lot of losses, but what you want to do is be able to just take those little paper cuts in and out, let them happen. But when you actually get your winning stock, when it fits your strategy, you can let that thing roar, and you can get a 10% move, 15% move, 20, 30% move in a very short period of time. So for example, that ticker symbol that I went over yesterday, ticker symbol INVE, right? That was right out of the gate a big move, 14%. So if you were taking little paper cuts here and there, but then all of a sudden you catch a 14% move in a day, it makes up a lot for that and some. So I just want to reiterate, it's a game of patience. It's a game of managing risk and preserving your capital. That's all I got for you on today's episode, everybody. Have a good day.